workplace retirement plan provides a great way to save for the future. Once you enroll, you'll need to decide how to invest your contributions. You can start with this simple question: how hands-on or hands-off do you want to be with selecting and managing your investments? Some savers are very hands-on. They prefer to choose and monitor their retirement assets on their own. Others are more comfortable letting professionals select and manage their investments. What's important to know is that your plan may offer a variety of options, like individual mutual funds, target date funds, and managed accounts for whatever approach you take. So, how do you know if you want to do it yourself? Hands-on savers may be more comfortable building their own portfolio. They're willing to put in the time and effort needed to research, select, and monitor a mix of investments. They realize the importance of asset allocation and understand how different asset classes like stocks, bonds, and cash investments work together as part of a diversified investment strategy. They know their tolerance for risk and clearly define their goals. They're usually committed to actively managing their account. They may follow financial markets and economic trends, and they try not to let emotion influence their investment decisions. They may understand the relationship between risk and return, realizing that some investments, like stocks, offer higher potential returns with higher potential risk. More conservative investments, like bonds, may be less risky but may provide more modest returns. Hands-on investors understand they should adjust their investment mix if their goals or personal situations change, especially as they approach retirement. If you're a hands-on investor, your plan offers a variety of options to help you create a diversified portfolio based on your goals. But this approach may not be right for everyone. Your plan may offer other investment options, such as target date funds for more hands-off investors. A target date fund, or TDF, is a mutual fund with a pre-selected mix of other mutual funds that generally matches up with the year in which you expect to retire. It takes some of the guesswork out of investing for retirement, potentially saving you time and effort and employing professional oversight of a diversified portfolio. Within a target date fund, the mutual fund manager adjusts the mix of investments as the market changes to align with the date of your anticipated retirement. Target date funds generally shift their asset allocation over time to become more conservative, potentially reducing risk as you near retirement. Your plan may also offer managed accounts. A managed account, managed by a professional money manager, can make sense for investors who want a more personalized portfolio or who have more complex financial needs. A managed account gives you a mix of professionally managed investments that are selected and monitored based on an expected retirement date and additional factors like your risk tolerance and specific goals. Managed accounts can also factor in other specific data points, such as your income, age, and other sources of retirement savings, like IRAs. Managed accounts can be adjusted by the investment manager as your personal and financial situations change. Whether you want to create an investment strategy on your own or want guidance along the way, your workplace retirement plan offers a smart way to get there. Enroll in your workplace retirement plan today. And if you have questions about your investment options, talk with your plan's financial advisor.